It might just not be coming back to you. It might not, but it might.
There we go. I'm back to the share now. And, you know, so the difference is, I mean, if we just talk about that train analogy for a minute, you know, the company is paying £100 for a train ticket to London. If the company is VAT registered, then the company is going to get 16.67% of that back in the next VAT reclaim. So that's almost 17% immediately. Of course, when the company submits its profits and its tax return, you know, in a year's time, the tax return will be 19% of that £100 less tax bill, okay, because of the corporation tax element. So you've got your 17, you've then got another 19, and that's just on the company straight away. You could also argue is that if the company said to that employee, I'm not going to pay for your train travel, you're going to have to pay it out of your own wallet, then the employee might say, well, you've got to pay me more salary then, in which case the company would pay 13.8% on that in an employer's national insurance. So already we're talking, you know, 17% VAT, 19% corporation tax, and potentially 13% to add to that in employers' national insurance difference, you know. But that's before you even talk about the individual. So that's tax saving on the company. But then when the individual receives their money, then the individual will pay their own national insurance bill and their own PAYE tax. And their PAYE tax could be over 50%, depending on how much they're earning. You know, so you could be, you know, well over 50% difference between something, the train ticket that the company pays for, and the train ticket that the individual pulls out their wallet and pays for. Another way to look at it is when you're earning your own money, is you have to say, well, for every £100 that I spend on my own personal spending, so if I go to the pub that's 2 minutes walk down the road and I spend £100 on a meal, okay, my company has to earn £220 of revenue or of profit in order to fund that meal, if all of the money was originally sourced from my company. So there's two ways of actually looking at that. But on the other hand, if I go to London and have that meal in London and it's subsistence and I can reclaim that through the company expenses, then actually my company only has to profit the £100 of the actual cost of the meal. So that's the sort of, there's myriad ways of actually conceptualizing this. But bringing that to a company car, if generally speaking, if a company buys you and gives you a car, whether you own the company or otherwise, then you personally will get taxed roughly, depending on the type of car and everything else it is, but you get taxed roughly 26% of the value of that car. Now, when I had a large company employing more than 100 employees, we offered all the key employees over a certain band private health insurance. And we did a deal with Bupa or whatever, where, you know, we got this group rate and everything. And we offered it, and only about 10% of the employees took it up because they knew that they would have to pay tax, benefit in kind tax, on that benefit of having the private health insurance. And there was a value to that, and basically it was roughly 25%. So the majority of my employees made a value judgment that the private health insurance was not worth their while, even at 25% or 75% discount, if you like, because they would be taxed 25% on the value of that insurance. So looking at benefit in kind in cars, it's roughly around 26%. So basically, if your company gives you a car, then your tax bill goes up by 26% of the value of that car. Obviously, the bigger the car, the more expensive the car is, then the more tax you're going to pay as an individual. But if you own the company, that's slightly different, isn't it? Because the company can buy the car, give you the car, you pay the 26% personal tax on the car, but then the company would get 50% of the VAT back on the contract hire payments of the car. the company would get the corporation tax deduction on the contract hire. So there's a trade-off on one side of the coin to the other side of the coin. Now, what if the government say, well, if you get this type of car, you don't have to pay any personal tax at all? And that's what's happening, and it's absolutely huge. If your company is to buy an electric car and give it to you as a benefit in kind, so it's your company car and you pay it, then the company will get its normal 19% deduction on the payments it makes towards that car. It will get 50% of the VAT back on the payments it makes if the company happens to be VAT registered. But you don't pay any tax at all. Moreover, the company can pay for the fuel, because if, for example, at your company premises, which might be a house or whatever, you know, that you plug the car in, then obviously the cost of that fuel can be borne by the company. Or if you're out on the road and you go to the charger in the motorway service station, then you can charge that fuel cost to your company. In any case, the fuel saving against is the difference between, on average, 2p to 12p. So what we're looking at is a 10 pence saving per mile on between a standard petrol car and an electric car. So there is a huge, huge saving, of which people might consider that the saving is a saving in fuel, but actually the saving in tax eclipses the saving in fuel. And I've done some calculations here, you know, that the annual saving, I'm not going to look at it in detail here, I'm just going to throw some figures out. But a VAT registered company on a higher rate taxpayer, the annual saving is £6,000 on a car with a monthly contract hire of £450. Okay, so that's 6,000 a year. That's 18,000 over a 3-year lease that you're going to save by having an electric car over a petrol car. Now, these figures I did some months ago. They might need a little bit of tweaking. There's always assumptions built into figures like this because everybody's tax position is different. You know, if you want to have a look at that spreadsheet, you can download it from our Files Vault area. And what I'll do in a minute is I'll just pop the link up to the Files Vault in the chat, so you've got easy access to it. And by all means, come back to me with any questions on it. And if you want to individually talk through it with me on the Zoom, then you may. Thoughts on that?
So I'm a big advocate of electric cars. I have 2 Teslas and no petrol or diesel cars in my family now. Electric cars are the way forward and they're the best thing going, so everyone should buy one, especially a Tesla Model 3, because it's affordable, it's 0% BIC, and it's 100% first year write-off against company profits, so you should definitely do it.
What's the monthly contract hire payments or lease payments, or have you bought it outright?
So just when leasing, especially a Tesla and actually a couple of the other electric cars, the thing which I found was to be mindful of the excess mileage charges. So all the lease companies for the Model 3 that I came across, apart from one, excess mileage charges were about 24p. Rather, if you bought it directly from Tesla on a business contract purchase, the excess mileage charges was 10p. So it really depends on if you think you're going to do more miles. And to be fair, you will do, because you'll drive it more because it's such a good car. But basically, the lease costs about maybe £30 less a month, but you end up, they charge you more for the excess mileage. At the moment, on the Model 3 that I got was just a base model. I think we put £4,500 as a deposit, and it's £460 a month.
Yeah.
So, you know, if you take off the fuel cost of say £200. The net
over
cost
3 years.
It's over 4, that one.
So sorry, excuse me, 4.5 grand you put in. Okay. Okay, so you've got to add about £1,000 a month. Is that right? Sorry, £100 a month to that to cover your spread cost of the 4.5 that you put down. So you're about £550 a month, aren't you? Spread.
Oh yeah. But I think the net was about 504 or 520, something like that. Yeah.
Yeah.
Which is reasonable because if you're spending 200 quid on fuel, then your net cost is only 300.
Yeah.
0%.
I mean, we've got Leaf, and the one thing about these is that the values are actually higher than you think they ought to be. I mean, it's the Leaf is, we've had Lexus before, and the Leaf is as good as a Lexus. Don't get me wrong. Don't let the Nissan badge put you off, you know. At 35 or whatever, 35k as a list price, you know, you think, bloody hell, that's a lot. You know, electric cars are more expensive. There's no doubt about that. Also, with the contract hire payments or the lease payments, the actuaries are putting the residuals down very low. So if you have, for example, a petrol Volkswagen or BMW, the depreciation elements of it is much smaller than if you had, say, a Leaf. Therefore, the monthly contract hire payments are higher as a percentage of the value of the car. Okay, so we're paying about £450 a month for a car that's about £35,000 list price. You could get a much more expensive list car as petrol BMW for less than £450 a month. So there's that element to it to take account of it, if I'm honest. The other thing I would say is that if you are regularly doing more miles than the battery can cope with in a day, it may not be for you at the moment.
Unless it's a Tesla.
The network out there is crap.
Unless it's a Tesla, that's the benefit of having a Tesla is a supercharger network, because that is reliable and you get 200 miles approximately in about 40 minutes. So, I mean, in my household, that's all I use, just the Teslas. But if you're doing, what I'd say, if you're doing more than 150 to 200 miles a day, then not the electric car's out for you yet.
Yeah, I agree.
Yeah. I mean, I can't. I mean, I've looked at this, and the best I'll ever get is a hybrid. At the moment, they're just not advanced enough. I need a bigger car, and you know, they just don't hold a.
Have a look, Ian. Have a look at the Hyundai Kona.
Yeah, it's a good car.
That's a Jeep, and it's I think it's 250 miles range. I think it's a 60 kilowatt battery. And to be honest, if you're going to get an electric car now, 60 kilowatt is the minimum, you know, that you should be looking at. Mine's a 40, but when they first came out, I think they were about 24, the batteries. But 60 is now the new benchmark, really. But 60 will get you, in the worst conditions in the winter, it will get you 170 miles. And in good conditions, it will get, in the summer, it will get you about 300 miles. You know,